At the end of every day, look at yourself in the mirror and ask, did I get better today? Monday, get better. Tuesday, get better. Wednesday, get better. If you do that for 5 years, 10 years, 15 years, how much better will you be? Are you getting better every single day? That's the real question. And it all comes down to taking small steps. You don't have to accomplish everything in one day or even 1 week. Just focus on getting a little better every single day.
And welcome back to another episode of Real Estate AF, where the AF stands for And Finance. And I'm your host, Mark Jones, and we are powered by LoanBot Smarter Mortgage Matching, now available on the App Store and Google Play. And stay tuned, guys. We're actually going to be adding additional tools to the family in the recent weeks to come. But regardless, we want to talk a little bit more about current events and what's going on in our market locally here in San Antonio. And I brought along another brain to share this conversation with. So without further ado, Alejandra Glass, how are you?
Hello, I'm doing good. Thanks for having me.
Absolutely. So this past weekend, I missed you at the Birdie Awards, and I really wanted to meet you. So I reached out and said, hey, jump on the podcast. Let's have a real conversation.
I love that. I'm always open to collaborate with other lenders and talk about the market. And yes, it was a wonderful time at the Birdies Awards.
Yeah.
I saw a lot of familiar faces. I'm sorry I missed you, and just, saw some builder friends.
There you
Perry
go.
Homes is a great company. They were there. Who else was there that we know?
Oh goodness, there was quite a few. He had some serious sponsorship for that thing. That was an extravagant event.
It's
Shout
beautiful.
out Jeff Garza. Great job doing what you're doing, man. Continue growing and continue doing what you do. Anywho, so this is about you today. And before we kind of dive into our topics, I want to give you a little time to tell us about yourself. Who are you? Where'd you come from? Where you been? And where you going?
Sounds great. So my name is Alejandra. I'm with Glass Mortgage Group. We are a DBA of a larger mortgage brokerage called Coast to Coast Mortgage and Lending. And I've been in business since 2010. So I guess about 16 years in the business now. Started with processing and underwriting mortgage loans, came in at a time that was right after a market crash.
Yeah.
I was processing and underwriting modifications for people that were getting foreclosed on and short sold and all of that. Not so fun, right?
Not fun.
Not fun at
Fun at all.
Very depressing. And, learn the ropes the hard way, right? Pushing paper, like they say.
Yep.
Learned the guidelines really well, and then decided, I'm a people person. I love people, love to make friends. And, the originating side, I feel like is more for me. And so came in on the lending side. I started as a marketing girl. I was the business development rep for local brokerage, Pilgrim Mortgage, for a little while.
Yeah.
And then worked my way into a credit union. And from there, became a loan officer, got into management fairly quickly within my first year and a half, trained those loan officers. And now I'm here and just a manager right now for Glass Mortgage Group.
That's awesome. So the fact that you jumped in and did the paper pushing first, then kind of got adapted to the guidelines, then switched over to the marketing side, it's like you were, without knowing, shaping yourself into a real loan officer. And why I say that is, as a mortgage originator, it's not enough to just go out and get the deals. It's also not enough just to be able to do mortgages. You've got to do both.
Yeah.
You get what I'm saying?
True.
You've got to know guidelines, and you got to know how to shake hands and kiss babies.
Yeah,
Not
for
the
sure.
other way around.
Yeah. And
You don't wanna
it's
shake
true. No, you don't want to shake babies. Not my baby. But you're right. You got to be able to do it all. I mean, wear all the hats, and a lot of loan officers. You have two types of loan officers in our industry, and I know you can speak from experience.
Only two?
You got, you got several kinds, but let me tell you, the main kind are the ones that rely on their business development person, and or the ones that are the business development person. It's like, who are you? Are you actually originating, or are you only the face? You, like you said, you've got to be well-rounded and be able to do it all. And thank the Lord, I was presented with opportunities to be able to shape me into where I'm at today.
Yeah. So what led you into the mortgage business? I mean, you got in 2010. I got in 2012. So it was after the crash. Matter of fact, I was in banking at the time when the crash was taking place. So it didn't really affect me because I wasn't playing with mortgages. I wasn't any of that stuff. I did have a 401k, but canceled that after seeing it go away. But the idea behind what led you, for me, it was my mom was in the mortgage business as a processor. I, at the time, was finance manager for Toyota Bernie here. And I was just tired of it. I was done. Wanted to switch. So I jumped in, took all of my real estate classes, got to the end and went, it's not for me. So I talked to my mom. She said, yeah, come on in. Talk to my branch manager at the time, and literally never looked back.
That's a great place to start as a finance manager in a car sales. I mean, that is cool because, you got the finance part of it. You got the sales part of it.
Yep.
I can see how you got to where you're at today. Really cool. For me, it was, my parents were entrepreneurs. I'm also first generation Cuban. My father is from Cuba. And
Cuban, B?
Yeah.
Okay.
So he's always had businesses. I mean, he's had insurance, eyeglasses, restaurants, bars, all kinds of things.
Wow.
Yeah. And my mother, she was always his helpmate, always, what are you going to do next? Okay. I support you.
Awesome.
Whatever
Awesome.
it is.
Absolutely.
I don't know how we're going to do this, but we're going to do it.
Yeah.
So growing up, for me, college was not something that I was taught.
Shame. Same here.
Yeah.
Yep.
And so, for me, but I still saw success.
Yeah.
My parents are very, very, I'm proud of them. That's all I can say.
That's awesome.
They've created a life for us.
Yeah.
And so seeing that, I was like, okay, I'm going to go to college. What am I going to do? So I did go to college for a little bit and then decided I like to work.
And I would even go as far as to say that your parents in raising you also didn't shield you from the world. Many entrepreneurial parents, kind of like myself and my wife, we let our kids see what we go through. We let them see the conversations we have, the ups, the downs, and how we get through them versus shielding them and making it seem like the world is all okay type thing.
Yeah. And that's important because it shapes them into who they are, and they're going to be successful because they're learning that from you and your wife. And that's all we can really hope for our kids is like, they're not handed everything, that they learn how to work and get in the ditches and mess up and say, okay, that's okay. I learned from it. And that's kind of where we're at. So, I got into was in college and decided, hey, I got to pay for this somehow because nobody's paying for this.
Yeah.
So I got to go to work. And I went through a staffing agency and they got me connected with Wells Fargo. And that was my foot in the door in the mortgage industry.
Okay.
Started on the phones.
Was it the Wells Fargo over there on Wiseman?
Yes.
Okay, very good.
Yes.
Yeah.
Everybody started
All
there,
of my
right?
friends
Everybody did.
Yes, all of my friends did. That's exactly right. Yeah, I was at the bank inside of Walmart. Then I went to Chase Bank, and then I went to sell cars. But all the while, all my friends, they were at, what is that, World Savings, Wells Fargo, and something else that was all in that area.
Yes, World Savings.
Yeah.
Yeah, I remember those are the days, man. We all started somewhere.
Yes, absolutely.
Humble beginnings.
Amen to that. So in growing your business, at what point did you decide to shift from, I just want to originate loans to I want to build a branch and a team and a group and a company type concept?
I think
or was it just natural progression?
I think it's just natural progression.
Yeah.
I think it just naturally, I just love to lead and I love to teach, and it just comes naturally.
Mm-hmm.
So it's not like I said, oh, I want to be, and honestly, I don't like to manage, if I'm being honest.
Same here.
I want you to go and be independent on your own. And thankfully, we have a team. It's just 4 of us, but I love it that way, and it was 5 of us. And, my goal with my 5th individual was, hey, I'm going to teach you the ropes of everything on the broker side. And then I want you to be able to go and open your own business. Mm-hmm. And he's doing that now. And that's I'm awesome. So proud of him. And that's my goal for the rest of them too. I don't want you to just be a loan officer.
Well, I will tell you, they will eventually if you do it right, because it's happened to me multiple times, and you just have to continue to tell yourself that was the plan all along.
Yes.
No matter when it happens to happen.
Yes.
Over the years, I've grown teams, shrunk teams, shifted, grown other teams, and as of most recent, it's just me originating now I've got a couple loan officers, but I've got my team stood up, the front, the back end, and it seems to be working really well. It's like you get that when you grow up and you say, man, if I had a chance to go back and do it all over again, well, I'm getting that chance. It started January 1st and it seems to be working pretty well thus far.
Great.
Yeah. Being able to focus on that without having. Now, here's a question for you. Because you're a branch manager, similar to myself, also producing, did there ever become a time in your progression, not currently, because I'm sure that's already been sorted out with the team you have now, but the idea of having to restrict your marketing, having to restrict your presence, et cetera, so that you're not overshadowing your loan officers?
I think we have a pretty well-oiled engine to where hey, if you want to host a class this day, that's
I believe that
Yeah.
now, but
Yeah,
just through your progression of that.
no.
Okay.
Yeah.
Yeah. With me, a little different because I was out there. I had my face on trucks, truck wraps,
Mhm.
boats, all kinds of stuff. I had to pull all that kind of stuff back so that I wasn't then overshadowing them.
Sure.
And I would hear it like, hey, we feel like we're kind of having to compete with you. And I'm like, well, I'm not doing loans anymore.
Well, this is recent for me because it's like, we've just been a team and a branch for about a year.
Okay.
So
yeah,
prior,
that is recent.
Yeah. Prior to this year, I was just an independent broker and it was
Gotcha.
all about me.
Okay.
So
That makes sense.
yes.
That makes sense. And we're on the mortgage banking side. You're on the broker side. So it's cool to be able to talk about this dynamically.
Yeah, I love that. I mean, a lot of my banking friends are lenders that I personally work with that have a wholesale division and we use their company.
Yeah.
And they're great companies. Yeah, it's really cool. We need each other, honestly.
Absolutely.
Yeah.
Absolutely.
Yeah. Mm-hmm.
So let's get into our discussion. Let's see. Our first kind of prompt of this is going to be the current market and what you're actually seeing out there right now. And in being respectful of the show's MO, we want to be honest. We want to be blunt. At the end of the day, you can be upset at someone for the way they say things, but what they say, if it is the truth, is what it is. Right?
Fair enough.
So that being said, that kind of frames it for you guys.
Fair enough.
What are you seeing out there?
As a lender, what I'm seeing a lot of is my agents are closing a lot more new construction deals.
1,000%.
Which is competitive for me because, I can say I don't really have any competitors. I'm always trying to be better than myself. That's a truth. Like I have an Excel spreadsheet for 2025, for 2024, for 2023. And I'm like, hey, how much did I close last year? How much did I close the year before? Yep. Okay. How am I going to beat that girl? Because I'm not that girl anymore.
Good point. Absolutely.
Right.
Yes.
And when I look at other companies, I'm like, okay, cool. What are they doing? Okay, that's cool. But I'm not looking at it as competition. When I see the builders, I see it as competition because for me, it's like, I can't touch those incentives. Unless I have a personal builder relationship with that company, I can't touch them.
Well, one thing that I'm going to say, and hopefully it comes as something that you maybe can start incorporating when this started taking place, because I used to be one of the biggest turndown lenders in San Antonio. We just fired up SaveMyBuilderLoan.com again. And once that started taking place around 2000, March, April, it was around May of 2000 when they started saying, no outside lenders. We've got plenty of business type concept. I would tell my loan officers, they're not competition. It's kind of like a borrower that goes to a credit union versus a mortgage banker or a broker. Well, yes, they can get a lower rate and pay less fees. They've got their shit together. That's why they do that. Me personally, I went to a credit union to go and get my loan. So in my mind, direct competitors are mortgage bankers to mortgage brokers, mortgage banker to mortgage banker, mortgage broker to mortgage broker. But when you're playing with money that we don't have access to, it's not even an even playing field.
I see what you're saying. It's not a competitor because you can't even compete. Exactly.
Correct.
And I think that's what I'm trying to say. It's this, I can't touch it.
Correct.
Yeah, exactly.
And it is frustrating. I will be the first to tell you that is very frustrating, but I also lead with the concept of you can't lose something you never had.
Right.
And if you didn't realize that they were going to go new construction until they went new construction, then shame on you. You probably should have had a deeper conversation day one.
Right.
One thing that I'm pretty sure you learn in going through this and how long you've been in the business that the new to the business loan officers have not learned is that high trust, high value conversation, day one type concept. Nobody's having those anymore.
Right.
So then all of a sudden they're like, well, they went to a new construction. Well, they probably were going to do that regardless. Did you have a conversation to get where their feelers were? If they were a rate shopper, if they needed help with this, you got to have that conversation to pull as much out. So that way you can at least frame what most realtors won't tell them, which is if you're planning on selling within the next 5 to 8 years, chances are you're not going to make money on this deal. Chances are you're going to be competing with that builder still. Still like that? By all means, I wish you the best of luck. If they can't do it, come on back.
Yeah. And that's the thing. Like right now, borrowers are so rate conscious. They're with this mindset of, I don't care. I just want the rate. And it's one of those conversations where I'll have the conversation with my agent and I'll ask them, hey, is your client interested in new construction homes? Are they interested in pre-existing homes? And sometimes I'll just go straight to the borrower and ask them up front, because sometimes the agent won't be honest to either with it.
Yeah.
Whether, if we have a relationship, we work together, totally, they'll be honest about it. But if it's somebody new I've never worked with, what I've found is they'll come to a broker because, brokers have the wholesale rates and we shop around, check them first. And then they'll take that fee sheet to the builder, because it's not what I'm noticing now. So maybe 2 years ago, 3 years ago,
there's not as much.
There's
incentives.
not exactly.
They're running
out. The rates are the rates.
They're running out.
The rates are the rates. They're throwing money in their face, but they're still offering that 6.5%.
And the price is still inflated, so they've got room there. Absolutely.
Yeah, and so the thing's like, so come to me and get the lower rate, and then they go to the builder and they're like, okay, here, match it. I'm sorry, I don't know. If you're going to go to a builder, you need to go straight to the builder, and I don't want
to do their thing.
I don't want to waste your time.
Absolutely.
Because I am considerate of your time. I also don't want to waste my time.
Right.
But client first, I don't want to waste your time. So go straight to the builder.
Yes.
And it is what it is, because we're all just trying to make it happen.
Yeah. No, I can't disagree with that at all.
Super frustrating.
Yeah, it is frustrating, but we're also seeing builders open up a little bit more on their appetite of taking outside lenders. They're not turning them away to take the next one. They're turning them away to say, hey, who else can do this? Because we got to sell this house now.
Right, exactly.
You know what I'm saying?
And thank God for good builder partners that, really see how hard we work.
Oh, 1,000.
We definitely work hard. And I can honestly say, I'm grateful for, my Perry partners. I'm grateful for my Starlight partners. I'm grateful for, all the builders that we do know that, do work with us and do offer incentives. Thank you. Thank you. Because it's not everybody that does.
You're right. No, you're on the money on that. Okay. That's pretty solid.
But that's where the market's at.
Yeah, that's right. That's right. Oh,
Rates
goodness.
and new builds.
It is true. It is very true. And let's see here. What do you think consumers are still misunderstanding about this market? Now, you mentioned something that I don't really want to combat, but I want to give more to. You mentioned buyers are focused on the rate, and I don't necessarily disagree, but I think that they are focused on the rate because that's what they've been indoctrinated with. That's what they've been groomed to be focusing on. They're more focused on the payment itself.
This is true. Right? And I think as lenders, if we shift that to, hey, let's look at the payment, let's find you something comfortable, then at that point it's more.
We're now meeting their real needs.
We're meeting their real needs, exactly.
Yeah.
So let's find you a comfortable payment.
Because you'll have folks that will come to you and say, hey, Alejandra, I want to get a $300,000 house with a $1,900 payment. Oh, and by the way, I need down payment assistance.
Yeah.
Okay, well, guess what? That's unrealistic in the world of real life. So it's tough having those conversations, but they need to be had.
Sure. And that's where I think us as professionals need to kind of step away from the mortgage, like take off your mortgage hat and put on your real AF hat and be like, hey, Mr. Client, this is where this is your first home. This is your first home. Let's talk about your goals. Like, your wife is pregnant. Okay, cool. You're going to have a child soon. Maybe you're going to want a bigger home the next few years. And sometimes the agents have that conversation. But I think when it comes down to finances and we see their numbers, then we have a fiduciary duty to our client to paint that bigger picture for them.
Yeah.
And that's just the fact. But I think it's the times that we're in, the economy that we have right now, and what's going on in the world, that everything is like this.
Yeah. And I do a daily post about this stuff. Matter of fact, I did my daily post. I haven't even posted it. I will do that. Whoops.
It's still noon. You got time.
Shit. But the idea of the economy and most layman doesn't know what's going on. So what do they focus on? The headlines.
Yeah.
And the headlines are intended for clicks. They're not intended to give you real facts, real data, etc. They're all opinion pieces. They're all intended to sway one way or another. And that's without even going down the politics route. This is all finance.
Yeah,
related.
for sure.
It's like, what in the heck? So where does someone get their actual real data from? There you go. Yeah. From you.
Yeah.
And that being said, I want to ask, are you finding yourself in this market spending more time than you would in the past with an individual borrower, individual family, et cetera?
Yes.
Tell me about that.
Yes. And it's so interesting that you bring that up, because it's on my mind, was like, I talk about this. But what's setting a loan officer apart And we talked about starting in the banking industry.
Yeah.
And you and I kind of chatted on it before we did the show, was a lot of loan officers are going back to the banking industry for a secure paycheck.
Yep.
Because the volatility of the market right now. But what's going to keep you in the game is going to be boots on the ground. You meeting with your clients one-on-one, having them come into the office, building that relationship. You know, I just took a client and their family, after closing, we all went out to eat, and it was so nice. It was just me and them. And they're like, I wasn't expecting this. You know, usually the agent will do this. So their agent wasn't able to make it. And says, you know what, she wasn't able to make it. So I want to do something nice for you.
Yep.
And out of that conversation, we were able to get a lead through that conversation, just because you're building real life relationships, and people appreciate that.
1,000%.
And is it working harder? Yeah, it is working harder, because when times were busier, you're stuck to your desk or you're stuck out marketing and trying to find the next deal. When now you're stuck to your client. And I think that's how it should be.
Amen. I mean, you're preaching something right now that I have. Is that back on? Okay. You're preaching something right now that I have adopted early in my career, which is more so the consumer direct focus, because technically they are our actual clients.
Yeah.
They're our fiduciary. And as we, grew up into this industry, kind of same footsteps, we had to go entertain realtors. We had to continue to stay in front of realtors, hoping that they're going to send us business, right?
Entertain.
It's what it is.
It's true. It is. Yeah.
Anything.
Yeah.
And as we progress, evolve, whatever we're doing right now, I'm finding that other lenders, now, mind you, I speak to lenders throughout the country, and everybody's trying to figure out how to do consumer direct. Why? Oh, because your realtors, they don't have as much business to go around right now, and they had 2-3 other lenders that they got to feed to, and so everybody's trying to figure out that consumer direct piece. But you just said it right now. It's getting more personal with your clients, giving a heck.
Yeah.
About them
giving
and
a
their
heck
situation,
about them.
you know?
Exactly. Yeah.
I would normally drop an F-bomb, but I don't know why I just couldn't right there. I just couldn't do it.
So we have children in the room.
That's right. That's right.
No, but it's true. And it's what makes a great loan officer great, and it's also how we help our agents. Think about it. If we're direct focused, we're able to get leads from those clients and give them back to our agent partners and feed them and say, because all the time I'll hear agents say, hey, I want to work with you, but, I've never had a lender give me a lead. Do you give leads? It's like, you know what? Never, ever, ever have I ever paid for leads. I'm sorry. And I never will. I won't, because we need to be what the realtors do is what we should be doing.
Yeah.
The client appreciation parties, all of that.
And here is my take on that, because I believe we are so aligned with that and have been for years, me personally, which is why we started reviewmymortgage.com to educate the consumers directly, et cetera. Yeah. I started in this business utilizing social media to get my customers, realtors, all of it. And in today's world, there's a large gap between what realtors expect from us and what the customer expects from us, and us having to please both, when truly the pleasing both should be pleasing the customer.
Right.
That should take care of both.
Yes.
Does that make sense?
Yeah. Because then they turn around and they say, hey, you know what? Mark did a great job. And then your agent's like, you know what? He did do a great job. And then now it's a collaborative effort and everybody's happy. And that's how I've built my business. And that's how we built our branch, is client focused. We're also operated by military members. Okay. So my assistant is prior Navy. My other processor is a military wife. One of our other loan officers is prior Air Force. Like we're built that way because we want to be able to relate to our clientele. And I was never military, but in San Antonio, we are a military city.
Yeah.
And in doing that, we're able to say, hey, you know what? We've been in your shoes. We know what you're going through. We're client focused. And that's honestly how loan officers are going to stay in the game right now, is if they start getting more consumer business.
That's right. The person that wins is the person that captures the buyer.
Yes.
First. And that is truly how I grew my business so large back in 2012, 2013. I was the one handing out deals to realtors until I went, wait a minute. You guys owe me a couple. You owe me a couple. You owe me a couple. And that's truly how it went for many, many years, and how we were able to survive through this when I was truly not in it producing, if that makes sense. All referrals, all working the book of business, continuing to stay top of mind with social media. But now in today's world, you've got to do that and then some.
A little bit more.
Yeah.
Got to go the extra mile.
So let's see here. What's harder right now? Ooh, this is a good one. What is more difficult right now? Getting a client or keeping the client, or getting the client to commit? And that's almost goes hand in hand with that whole concept of, in order for someone to be a buyer, they've got to be ready, willing, and able.
I think it's getting the client to commit.
Okay.
And even as a broker, somebody who shops for the clients, I am seeing my clients shopping me, and I'm like, wait, why are you shopping me? I'm going to shop for you.
That's right.
That's right. But it's getting that client to commit for various reasons, for the shopping, but also for, I'm scared to buy right now because I don't know what's going to happen tomorrow. Are we going to go to war? Are we not? These are real conversations. I mean, as a matter of fact, I have a client right now, and he's visa holder. So he has purchased homes in Europe, but he has never purchased a home in the US. And for him, it's difficult for him to commit because he's like, I'm not used to this process. And when in Europe, I just buy a home and that's it. And I'm like, but I need you to sign this document.
Yes.
Can you sign this document? I need it by 5 p.m. tomorrow. And then I send a message in the morning. Hi, just checking in. Do you need help signing that document?
Right.
Do you need to come to my office? I mean, it's like really just kind of hand holding.
Yeah.
It's not hard to get the client if you have the agent relationships. It's not hard to keep the client if you're truly serving the client. They're gonna stay with you. If you're doing all the things that we've been talking about, which is, meeting with your clients and putting them first. But it's hard to get them to commit right now.
Yeah.
They're scared. Okay.
For me, on a broader scale, it is number one. Matter of fact, the answer is not even one of these options. It's easier to get the client. It's tougher to actually do their deal, meaning, and it kind of goes hand in hand with what I've been preaching for the last, year. The people buying right now are the ones that could not buy in 2020, 2021. Why? Because they would have.
Yeah. Yeah.
It's just a simple fact of that matter. And then you've got the second. Go ahead.
You don't think that it's not a matter of they would have, it's their mentality and their mindset?
Yeah, no.
No.
Nope. Okay. Only because we are humans. We have humanistic traits, herd thinking. So therefore, in 2020, when rates were where they were, everybody and their mother, I made the most money I'd ever made in my life.
Yeah, for sure. It was a good year.
On a W-2. It was good 2 years. And I'll say that. But the concept of they would have done so. I mean, I'd put it this way. I am the type of lender that is very transparent with my clients, very blunt with my clients. I have maybe 1% of the clients that don't like that approach, and that's fine. That's okay. Even my very, let's call it liberal, analytical, feely, that's 3 different types of clients right there, by the way, guys. They appreciate how honest the feedback is, honest the options are, etc. And I'll ask them, why didn't you buy in 2020? I'm like taking a silent poll. Oh man, because of the credit, or because of the this, or because of the that. And asking guests over and over, I'm like, have you guys noticed that deal and realtors too?
Yeah.
That deal, have you ever extended contracts more than you have in the last year? Oh no, yeah, you're right. I just realized that. Yeah, like every deal requires an extension, and it has nothing to do with the seller, right? No, it's always the buyer, something to buyer. I know. It's like there's always something right now that's happening on the buy side that even experienced lenders, they're having difficulties with. So that is a tough part. But then the second thing to that, because they're all tough to be, they really are. I don't think there's a wrong answer to this. The fact that the consumer has access to so much information right now. And unfortunately, most of the time, it's inaccurate information.
Right. That's true. They'll go to ChatGPT and ask mortgage questions,
That's
or
right.
they'll go to
You're right.
Google. I'm like, why didn't you call
Yes.
me?
Because
they have access to that information. It's easy.
we are the experts.
Right.
That machine is supposedly the validator.
Right.
So what ends up happening is they jump on there and they get to scrolling, they go down the rabbit hole, they see some made up program, and now they're in somebody else's pipeline.
Yeah.
That has not told them the truth about it yet,
Right.
but they're in their pipeline, if that makes sense.
No, for sure. And that's, it's one of those things where we were talking about innovation. We have to make sure that our mortgage company is up to speed with the AI, with everything that we are technically competing with, even though we're not. It's a computer, but we truly are, because again, it's quick text message, it's quick phone call. If you don't pick up when they text or call, they're going to go to ChatGPT.
That's right.
And that's a fact.
That's true. You're on the money. And that's actually a good transition. So now we're going to be talking about adapting to stay in business. And you mentioned technology. I don't know if I want to lead with that one. Let me see here. A lot of agents and lenders have, this is a good one. A lot of agents and lenders have exited. In your opinion, what separates the people who survive versus the people who didn't?
It's going to be that personal touch. That's it.
Yeah.
It's especially with us being managers and hiring and meeting with so many loan officers, these newer loan officers, they're wanting to know, okay, do you give leads? Or, okay, are you going to teach me how to do this? And I'm sorry, the broker world is very different than the retail world.
Yep.
Yes, I'm going to hold your hand. Yes, I'm going to teach you all those things. But no, we don't give leads. You have to be unafraid to go out and get your business.
Absolutely.
This is what,
Yes.
And
you can even tell them, the reason why I'm providing your borrowers with such good rates is because my margins are thin, guys.
Right. Exactly.
So which one do you want?
Right. Exactly. And that's, and that's how we're going to stay in business, is just getting back to the grassroots. Back when they didn't have cell phones, you got to show up at the door and, hi, Mr. Realtor, I'm here.
It's true. It's true.
It's Alejandra Glass, I'm here. So that's it. We just got to get back to that.
Yeah.
Otherwise, they're going to have to go sit at a desk at Wells Fargo and push paper and get those leads and get a steady paycheck, which is great. And that's fine. There's nothing wrong with that. Nothing wrong with that, by the way. Everybody's different.
So that being said, with adaptation, evolution, so many industry professionals exiting or putting a pause or whatever you want to call it, what would be one or a couple of things that you have implemented or that you would advise anyone to implement in their business as, let's say, a non-negotiable?
I'm really blessed to have found an amazing LOA. Okay. It's really difficult, I think, to find a great partner.
Yeah.
That's somebody that's taken me, 16 years now, 16 years to find the perfect person. And I always tell him, hey, Jordan, you're my right-hand man. You can't do this alone, especially as a wife and a mother. And it's very different than, I'm sure you can tell me if this is true, it's very different than being a male in the business.
Oh, for sure.
As a female, as a mama, as somebody who's trying to grow your family and all of that, you need help, and there's nothing wrong with saying, hey, you need help, you need a LOA. But even people that aren't mothers, that aren't wives in this industry, men, they have LOAs. And I highly recommend it, whether it's an LOA to help you stay on top of your game with your phone calls or to help you gather paperwork or whatever it is,
That's actually a good topic for just a moment, the LOA concept, only because in our industry, and it kind of goes hand in hand with what we're talking about here, evolution has done what it's done. And a lot of the things in our business can be automated. A lot of the personal touch can't do that. But reviewing documents, some of the automations, that can take the place of that person to a certain extent. But then I also want to go into the fact of not everyone deserves an LOA.
This is true.
And I've seen it numerous times. You tell me if you've witnessed it, let's say on another team, et cetera. The person gets an LOA and they do the same level of production. That shouldn't happen. Right?
No. Yeah. No, for sure. I mean, and our business model here is a little bit different. I've seen it where, some companies will provide a LOA once they
shared
reach
LOA concept.
Yeah, we have more of a shared LOA concept. And it, it depends on that individual LO, what do you need them for? And they, they're multifaceted in what they do. So yeah, but then also shifting into our technology.
Yeah.
So aside from LOA, is our technology up to date? Are you providing AI now? Are you is your LOS system up to date? Are you still using Encompass? It's got to be, yeah.
We just switched off the Encompass. That's awesome.
Great. I mean, it's, we have to. And this is where, we have to be real with ourselves. Hey, that's okay. That worked for a little while, but times are changing and now we need something better.
Yeah.
We just changed
and cheaper.
Yeah, exactly. Thank you. What I'm saying, now we're using Arrive, which we love.
Okay.
Have you ever used Arrive?
I've heard good things about it.
It's so great, which we love. And before this, we had Lending Pad, and Lending Pad was like,
we're using Bite now, and I'm kind of in love with it. It's like, how did y'all come up with something that does everything we need it to do?
Very cool.
Yeah. So
let's check that out. But yeah, I mean, we love Arrive. It's something new, and it's been great. So just kind of keeping up with what's new to help innovate our business.
I love that. And as far as from a technology perspective in regards to tools, you mentioned ChatGPT or AI. Do you, which whether you do or don't, you should start doing your own research and how to implement it in your business, and then show your realtors one-on-one. Here's what I learned. How can we apply it to your business? And the reason why I say that is we are too many times skipping over opportunities of value because we just don't realize, don't do the work twice. Meaning, okay, if I just did the research and now I'm implementing it into my business, I'm either going to record this or I'm going to use it as the next one-on-ones with my agents that I care about. And then whoever, great. But at the same time, that's a huge value add that they're not getting anywhere else.
Oh,
you get what I'm saying?
Oh, yeah, totally. I mean, we've had ChatGPT classes. And as a matter of fact, this morning, we recently changed our company logo again to innovate and keep up with the times changing and all. Yeah, just to kind of keep up with things, and we use ChatGPT for that. And it saved us money. Why wouldn't we?
Exactly.
And these are things where, had we hired a graphic designer, cost us an arm and a leg, or
you're
maybe
right.
a finger, but still would have cost us something.
You're right, a pinky,
a pinky. But still, it's still saving us money.
Yeah, you're on the money on that.
I love ChatGPT, man. I'm not
Same
against
here.
it. But I will say, I don't like it, and I've got a friend that does this when they use ChatGPT and then they just copy and paste the whole thing and put it on social, and I'm like, man, that does not sound like you. At least make it sound natural.
That is a prompt. That's exactly. It's all about prompting.
The dashes give it away.
Yes.
Matter of fact, I've already programmed mine to never put dashes, use ellipsis instead.
There you go.
Automatically.
There you go.
And for those out there that are, seeking education in regards to ChatGPT, I've got a complete playlist. It's called The Mortgage Truth, where we show realtors, lenders specifically, how to leverage that, how to prompt correctly, how to paint that picture for the infant AI that's about to do all your work for you. So, anywho, let's see here. Has the market rewarded discipline? Oh, yeah. What do you think about that? Has the market rewarded discipline through this last, let's say, couple of years?
Oh, yeah. I mean, definitely. The harder you work, more business you're going to have. Mm-hmm. You should always be working for the next couple of months.
Yeah.
Every day you need to have your schedule in place, your to-do list. First thing I do when I sit down is I write on, first thing that I do is I give thanks to God for the day.
Amen.
Yeah, definitely. It's going to be a great day. Thank you, Lord, for everything you've given us and the opportunities that we have, because not everybody has this opportunity to do what we do. So a heart of gratitude, but then sit down on my to-do list. Okay, this is number one. Got to do this today. Number two, got to do that today. And if you're not doing that every single day, what are you doing? My husband, he's an engineer and he does software programming for a nuclear company. And it's interesting because his team every single morning they meet and they have a meeting. And I told him, "What do you have a meeting every single morning?"
Because they're scared of getting replaced.
Dude, I'm like, man, you know what? Like, I'm meeting once a week.
Don't be mad at me for saying that, husband, Mr. Glass. Okay.
Yeah, no. He's good. But it's one of those things. Why not meeting every morning? Well, the same thing with us sitting down and writing our to-do list every single morning. It's a short 5 minutes. Boom, boom. What are you going to do today?
Yeah.
Yeah. Discipline is so important. If you're not disciplined, and you can tell who's disciplined by their numbers in the production.
1,000%. Yes, ma'am, you are correct.
Yeah.
Or those that are distracted or those that are not fully in this.
Yeah, for sure. And you cannot do this part-time. Anybody that comes to me and says, "Oh, I want to do this part-time or I have another job." I'm sorry.
it's not for you.
It's not for you. Or maybe my team's not for you.
Yeah,
but
you can try.
You can try. Yeah.
But
Yeah.
you still got to learn how to do loans.
Right.
Then you got to learn how to go get the loans. Then when you get the loans, you got to figure out how to do the loans.
Well, your reputation's everything.
That's right.
And word gets around quick.
Yeah.
And the real estate community in San Antonio is very small.
Yes, it
if
is.
you screw up a loan or something, I mean, it's just going to get around like wildfire. You cannot afford to do this part-time.
That's so true.
That's so scary.
You're on the money. You are on the money.
Yeah.
Let's pull up some market. How are we doing on time, JC?
43 minutes in.
Told you.
Perfect. Okay. I was like, I can't talk that
Told
much.
you. Yeah, okay. We're not even to like number 4. I'm having to skip ahead. That's awesome. Okay, so I've got some market data here. I'm going to throw this up on the screen. Let's see if we can, JC, if you can, Kapawi. All right, let's see if I can make it bigger without it broken.
Okay.
All right, realtors, I'm going to say something that is going to sting a little bit. Most of you are using AI completely wrong. You're asking it to write captions. You're asking it to rewrite listing descriptions. And you're using it like a slightly smarter intern. But the agents that are quietly winning right now, they're using it for strategy, conversion, and systems.
We're good.
Ready to go? Just kidding. Okay, so when you hear balanced market, make sure that there I am. When you hear balanced market, do you think of the phrase hides how hard it still is for the average home buyer? Like, yeah, we're in a balanced market. And the reason why I say that is I've got this data up on the screen. And when asked ChatGPT, and like I said, mine is very trained, it only provides factual data, no fluff. San Antonio is more balanced, but not easy. Sabor's January 2026 report showed that 1,974 homes sold, down 10% year over year, with 15,000 active listings, up 11%, 5.49 months of inventory, and 98 days on the market, which is up 17%. The median sold price is $292, almost $293, down 1% year over year. That is not a frozen market, but it is clearly more patient and more selective market. So when we hear, and you can kill that, when you hear on the media that, God, we hear everything on the media. It's like the sky is falling. The next war is going to happen. This
Propaganda.
is so much of it.
Yeah.
And then you actually look at the data and you go, well, we're actually in a balanced market. Does it feel like it?
It doesn't feel like it, but I think we are, honestly, which is probably not the answer most people would expect me to say. But I think we are.
Agree. Yeah.
Yeah, because you have, prices of homes coming down, even though the rates are going up. And that in turn kind of balances everything.
Yeah, you're on the money on that. I believe what we have is, like you were mentioning earlier, a ton of borrowers that are just scared.
Yeah.
And have not been educated well enough to know that as long as you buy it and hold it, you're going to be fine regardless of anything. But I think we do have a lot of the mentality from the younger generation that you've got to make money from your house because everybody did in 2020 and 2021.
I think you have a lot of people that want to be investors because they watch HGTV or they see us on social media and think it's easy, and it's not. And I think that, us as lenders, when we're doing those investment property loans, teach them, hey, what's your strategy here? Are you trying to make $300 more per month? Because if you are at this interest rate, maybe we need to wait. Maybe we need to change our mindset here. And it's a buy and hold market right now with the current interest rates, which, like you said, it'll turn around. We've seen, both of us have been in it almost the same amount of time. We've seen over time that, what goes up must come down.
Yep.
And it's always, in my opinion, I'm not saying this because I'm a lender, okay? It's true. It's always the right time to buy.
Yeah. No, you're right.
It's true.
But so yesterday I went to my son's baseball game. My mom is a processor for a non-QM lender, and they are slammed. Like, her branch closed 38 investor loans last month and have another 30, 40 in the pipeline. And I was talking to her, I'm going, man, isn't it silly how we're having to pull teeth to get these first-time home buyers to understand that it's still the right time to buy. As long as the numbers line up with your budget, et cetera, and you qualify, it's still the right time. And you've got investors that are putting 20, 25%, 30% down to continue to buy homes.
Mhm.
And we're not talking your BlackRock, Black Sheep, Black whatever. The idea is these are mom and pop folks like you and I that ran out of traditional ways. Now they're going alternative to continue to growing their portfolios.
Mhm.
How do you feel about that?
So I think that, and this is a lot of the reason why we changed our logo as well.
Okay.
I think that there was a time where we were heavy with business from first-time home buyers and
Sure.
primary residence homeowners. But given the current market and the prices of the homes coming down and the investors looking for the great deal, who was it that said, when nobody else is buying, that's when you should buy?
I know Warren Buffett said,
Warren
don't
Buffett.
wait to buy real estate, then wait. But I have heard that before. So yes.
So you've got a big pool of investors that are looking for these debt service coverage ratio loans.
Mm-hmm.
You've got people coming from Mexico purchasing in San Antonio, which
Right.
we're at. Yeah. You've got a huge need for these investor loans, which is why your mom is so busy.
Yeah.
And so us as lenders, we offer those products. We both do.
Absolutely.
And so because we offer those products, every lender has like their niche, right? Like you'll see like the military credit unions and military lenders, their niche is VA. That's
because
fine to
they're high
have it.
margin, by the way.
Yeah. And it's the truth.
Keep it real.
But, sometimes you have to change your business model according to where the market's at in order for you to remain in business or to remain fruitful, right?
Absolutely,
And
yes.
so that's, again, it goes back into our innovation topic. We're innovating, we're changing, we're adapting.
Yes.
We're adapting to this current market.
Mhm.
We need to adapt to the investors in this market. They don't care that a DSCR loan interest rate is 7%.
You're on the money.
They don't care that the international DSCR, what are they called? Yeah, they're DSCR loans for international.
Yeah.
I don't know what they're called. But those are 9%.
Yep.
They don't care about that because their mindset's different than the first-time home buyer.
You're on the
Yeah.
and that mindset in itself allows that investor to go, wait a minute, there are some tax benefits to having that higher rate that I can then write off over here.
Mm-hmm.
But the first-time home buyer only sees the payment.
Right. Exactly.
Yeah. And unfortunately, there are still too many that their vision of their first home and their payment do not align. Does that kind of make sense?
Oh, yeah, for sure. And I would say this, like if you bought a home in the last 2-3 years and you had a conversation with your loan officer, like, I want to build my portfolio, I'm going to come back to you.
Mhm.
And you were very green buying your first home last year, the last 2 years, the home that you're sitting in right now is your first investment property. That is your first investment property.
It was my first. So
Yes.
yeah, you're on the money.
Yes, because otherwise you're going to turn around, you're going to put 20-25% down on your investment property. Why? You're already in it. Just buy
Boom.
another primary and put less down.
Boom.
Like, yeah, see? So,
Weird. Is that a hack? No, that's just
No.
life. That's lending guidelines.
Yeah.
It's just someone taught you how to do that. So you went and did it again.
right.
And if nobody's taught you before, we just did right now. You know?
Boom.
Boom. I love it.
Boom.
That was awesome. Okay, so let's wrap this up. But before we do, it's time for rapid fire. Pew, 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 pew.
Hit me. What's up?
Okay, so in this rapid fire segment, I'm going to be asking you questions
Okay.
and no explanation. It's just answer. We're moving on to the next. You don't have to explain yourself.
Okay.
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 So here we go. We're keeping this short. We're keeping it punchy. And buyer markets or sellers market in San Antonio right now.
Buyer market.
More important in 2026, database or social media?
Database.
Tougher clients right now, first-time home buyers or unrealistic sellers?
First time home buyers.
I would have to agree. Better strategy for today, more leads or better conversion
Better conversion.
all day? Which one's a bigger killer? Let's see here. Inconsistency or lack of skills?
Inconsistency.
Okay.
You can learn skills.
You can learn skills. More important, rate knowledge or communication skills?
Communication skills.
I have to agree. Rates, they're published daily, guys. They are what they are. We don't affect them. Y'all do, technically.
Mhm.
Let's see here. One mortgage myth that you wish would die.
Oh God, I don't know.
Take your time.
One mortgage myth that I wish would die.
That is a tough one.
Date the rate, or what do they say?
Ooh, marry the home,
Marry
date
the
the
home,
rate.
date the rate. I
marry
wish
the
that
home.
died.
That was mine.
I wish that gets divorced.
I wish they would just break up already.
I hate that.
Which one got half?
Yeah.
No. Okay, let's see here. One real estate myth that you wish would die.
State. That you have to pay your buyer's agent. That's not true.
Okay, very good.
Buyer's agents are free for the buyer.
One business habit that you think every loan officer or agent needs. I think you said it earlier.
You need to every day create your to-do list, and you need to make your phone calls every single day, even when you don't feel like it. Get dressed, go out there.
What I'm hearing is consistency, guys. Whatever you do, consistently do it. Period. Let's see here. If the market stayed like it is right now for 2 more years, who wins?
Buyers or buyers or sellers, or what do you think?
I mean, who wins? I was waiting for you to say me.
Me, I win. No, I mean, it's your mindset.
Touche.
You know, the buyer is the investor. He's the buyer, and he's winning right now.
Yeah.
The first-time home buyers, they're scared, and it's the poverty mindset.
Okay.
So,
Last question. And actually, 2 more questions. What keeps you confident right now in this market?
keeps me confident is my knowledge, honestly, my relationships that I've built.
Okay. And then the last one, what's next for you?
Next for me. Well, I'm not going anywhere. So I'm going to keep doing what I'm doing and continuing to grow, really. So you'll see a lot more of me.
I love that. And hopefully this will go very far, because this was a pretty insightful episode where we definitely were raw. We definitely gave the truth side of things, and plenty for not only home buyers, but also other realtors and lenders out there to grab something from. That being said, Alejandra, thank you for joining. Thank you for having this conversation with another lender. Oh my God. What? Yes, it is true. We can get along. Is there anything that you'd like to tell our listeners before we hop off of here?
Thank you so much for having me. This was a lot of fun. You guys just go out there and buy real estate. When you're scared, just do it. You know, loan officers, if you're scared right now, don't worry about it. Just keep doing what you're doing. Consistency. The leads are gonna come. Just keep doing what you're doing. If you're a seller in this market right now, you've really got to make sure that you're working with a really great agent, because a lot of sellers will sell their home quick. A lot of others will have their home sitting on the market. So who you work with matters.
Love it. I love it. Thank you. So for you listeners out there, if you are, let's say, a loan officer, a realtor that's currently in this market feeling discouraged, sucks to suck. No, I'm just kidding. The idea behind it is you've got to first start with a hunger to want to do those things. Matter of fact, I was practicing with my son in the driveway last night after his baseball game, and the idea behind him just focusing on dribbling drills for the first 5 minutes was excruciating to him. And the reason being is it's boring. It's mundane. It's the things that we don't have a ton of fun at doing, but we probably know we should be doing them before we go to the next thing. So focus on those needle moving activities, back to the basic concept and consistency. After a week of doing them, no, you're not going to get results like that, guys. For those buyers out there, I kind of echo exactly what Alejandra said. There's never a great time to buy, and there's never a bad time to buy. It's when you are ready, when you feel you're ready financially, when that payment aligns with what your appetite is, and doing the math, getting with an expert that will provide you all of the options, both on the real estate and financing side. So hopefully you guys are getting stuff out of this. Take a trip back to a couple of the other episodes if you haven't already, but stay tuned for each and every episode like we do every week. On Wednesdays, they get released. Thanks for liking and subscribing. We are like almost to 50,000. So if you haven't yet, hit that like button, subscribe, all the rest of the jazz. Till the next one, we'll see you.
At the end of every day, look at yourself in the mirror and ask, did I get better today? Monday, get better. Tuesday, get better. Wednesday, get better. If you do that for 5 years, 10 years, 15 years? How much better will you be? Are you getting better every single day? That's the real question. And it all comes down to taking small steps. You don't have to accomplish everything in one day or even one week. Just focus on getting a little better.